Good morning, traders, and welcome to the weekend update here for August 2nd, 2026. Steve Gans here, and I'm going to walk you through what happened in our markets here this last week and what expectations might be going forward. Now, I'm in a different location. I'm actually up in Big Bear, California this week, up in the mountains where it's a little bit cooler. Down home, it's in the 105 degree range. Up here in Big Bear, it tends to be about 20 degrees cooler. We're up at about 7,000 foot elevation. So, taking a look at the first three, and I want to make a comment on this first. I've had some people post in YouTube that I go through the SPX, SPY, and ES, and they're all the same. They do represent the same index, but the trading that takes place in them is or can be substantially different. Now, the reasons for that are that the ETF SPY tends to largely be retail traders. SPX tends to be more of your institutional trading, but it's options trading. And then the S&P futures also is institutional trading, but it trades largely round the clock, where SPX is limited to roughly an 8-hour day. So there are differences in these, even though they are representing the same index. And if you're a trader of one of those, it's really important to understand those differences and those nuances. So I am going to start off here with SPX. We take a look at SPX. We can see that we are essentially still in that whole channel configuration here. Not just a channel, but really starting to form or continuing to form a flag type pattern. And we'll have to see where that ends up this week. Now, we had major earnings this last week, and for the most part, they were above expectations. There were a couple that, even though they were above expectations, they actually sold off a little this week. That was Meta and Apple. The others had pretty significant upside moves. I know Amazon did, Microsoft did, a number of others. So as far as economic reports coming up this next week, the major one is going to be the non-farm payrolls, which is next Friday. There are a few others happening this week, but nothing earth-shattering. There's also lots of earnings coming up this week as well, but none quite as big of movers as what we had last week. Now, let's take a look at SPY. Again, as previously mentioned, the chart is going to look very similar here, but we can tell different things, like retail traders here bumped up their activity here last Thursday and Friday, where the institutional traders largely stayed about the same. There wasn't really an increase in that activity. If we look at the S&P futures, we can see that there was a little bit of increase in the institutionals in the futures market. We look at volatility, which volatility is on the index overall for the most part. Volatility is back here at almost all-time lows, so that's signaling no real fear going forward. Right. We look at IWM, or the Russell 2000. It has by far been the strongest of the ETFs here. It has been trending higher overall. If we take a look at that overall market trend, it's making higher lows and higher highs. So it's been more bullish than the others here in recent weeks. And so far, looks like it's going to continue to do so. If we look at volatility in Russell, it's down here at pretty much all-time lows. So again, a bullish look for Russell. We take a look at gold, and gold continues to chop in this sideways channel. I did mention last week that a good, interesting potential paper trade to learn from right here might have been to put on a channel in G. By a channel, I mean an options trade that benefits when it stays in a channel. In this case, it might have been something like a condor, maybe structuring a condor between this 385 and probably 360 range, something along those lines. Again, everything I ever mention here is all about learning and paper trading. So with that, that gives us the weekend update wrap-up here for August 2nd, 2026. Take care, everyone, and if you're in the Southern California area, try to stay cool. Head to the mountains, maybe. Take care. Bye.